Last week on Friday, we saw a major dump on Bitcoin and on many altcoins. Some altcoins were crashing around 90% towards the downside. So this week is going to be a very important week for both Bitcoin but also for Ethereum. In today's video, I'm going to exactly explain to you guys what my next plans are from here on both Bitcoin but also on Ethereum. There's beautiful trading ideas lined up on both. So without further ado guys, let's dive into the charts. As I said, what we can see over here is that Bitcoin formed a major wick towards the downside. Guys, this wick pushed in towards a liquidity pool that we had resting beneath a low over here and also that we had resting beneath a low over here. Now, we know that if price forms a major wick into liquidity pools like this, that these wicks are leaving behind a lot of liquidity. So we know that this big wick is still acting as a draw on liquidity for the price of Bitcoin. Now we also know that these wicks, they tend to get filled for 50%. So if I mark out that EQ level over here of that wick, right here, we can see that I mark out that EQ level around $107,500. What is very interesting about this 50% wick fill level on Bitcoin is that it exactly aligns with the liquidity that was and is still resting beneath the lows over here. What do I mean by the liquidity is still resting beneath the lows over here? Like I said, a wick is indicating a liquidity pool. But why is it indicating this liquidity pool over here? Because a wick is indicating too fast of a price movement in towards a liquidity pool, like we're resting over here or like we are resting over here. Now, why is that a problem? Because if there's a lot of liquidity resting beneath the lows over here, and smart money, the bigger players in the market, want to use that liquidity to fill their own bigger buy and long orders. And they have their long orders resting in that area because there is a lot of liquidity present, or maybe in this area over here. And they are waiting for their orders to get filled. Their orders are so big, guys, that it takes time for their orders to get filled. Those orders, they don't get filled in minutes or probably not even in hours. Because let's say a real life example, you want to fill hundreds of thousands dollars worth of lemons as buy orders. So you want to buy $100,000 worth of lemons. You're not going to be able to fill your bag with all those lemons in a couple of minutes. It's going to take hours. Probably it's going to take even days to fill bags with $100,000 worth of lemons. It works the exact same for smart money. If they want to buy Bitcoin, a huge amount of Bitcoin, which they probably were planning on doing over here, or they want to even sell Bitcoin in the liquidity pools over here, that's going to take time. Now, this wick is indicating the price was spending too little time in that liquidity pool, so the price is likely going to revisit that wick and then potentially bounce towards the upside. But most importantly is that it's going to revisit this wick and fill it at least for 50%. And like I said, it's interesting that this 50% wick fill level exactly aligns with the liquidity pool that we have resting over here. So that is my current target for the price of Bitcoin intraday for this week. Whoops, you don't want your portfolio to drop like that. So make sure to like and subscribe and let's keep things steady. If we then navigate towards the 30-minute time frame on Bitcoin, it gets quite interesting because what we can see is that Bitcoin was building up quite a liquidity above the highs over here because it was slow grinding towards the downside over here, as you guys can see. We can see that early during the week and over the weekend, Bitcoin squeezed towards the upside to mitigate all of that buy-side liquidity. After mitigating that buy-side liquidity, Bitcoin started distributing over here. Now, the biggest sign of distribution, in my opinion, was another slow grind towards the downside over here that led to an impulse towards the upside over here. While impulsing towards the upside, Bitcoin was sweeping a lot of buy-side liquidity that we had resting above the highs right over here for the price of Bitcoin. And while mitigating the buy-side liquidity, while sweeping the highs right there, it front-runned a high over here. But more importantly, by front-running that high right there, Bitcoin was forming an SMT with Ethereum. So Ethereum was forming a higher high, and at the same time Bitcoin was forming a lower high, what we call an SMT divergence, a smart money technique divergence for a potential high probability reversal. Now, after this SMT and a sweep of the highs over here, we know that this became a significant low to break because this low brought us to a higher high over here compared to this high over here that brought us to that low. So therefore, this is a valid and high probability market structure break. So we have an SMT followed by a market structure break towards the downside, and we can also see that Bitcoin formed the high of the week over here on a Monday. Before I forget to tell you guys, over the past few weeks we obviously have been killing it, and many people have been wondering where I have been sharing my exact trade signals. And I'm not only sharing my trade signals here, I'm also sharing my education here, and it's now completely free. Completely free access for 14 days to what I think is the best and most authentic trading community in the space, Tribe Capital. The first link in the description down below is all that you need to click on to gain 14 days of completely free access to our premium section. Now that is quite interesting because when we look at the weekly time data on Bitcoin and we go to the data explorer over here and I select the last 18 months of data, we can see that 70.5% of weekly candles form their first pivot on a Monday according to the Brighter Data statistics. That means that 70.5% of the bearish weekly candles form their high on a Monday and 70.5% of the bullish weekly candles form their low on a Monday. Meaning the fact that we formed this high over here on a Monday and right now we are forming a new weekly low towards the downside on a Tuesday means that based on the timing of the current weekly high and the current weekly low on Bitcoin, there is a high probability that if we get a bearish weekly candle, that this high over here is going to hold. So that makes up for a nice invalidation for our bearish thesis. So in my opinion, as long as that high holds, we should be seeking for shorts, targeting that 50% week fill level towards the downside on the price of Bitcoin around $107,500. Also, Ethereum guys saw a major crash towards the downside and put in a big wick towards the downside over here. While putting in a big wick towards the downside over here, it wicked in towards this liquidity pool right there. Now, Ethereum is a bit of a different story because if we have that liquidity resting beneath that low and we extend it to the left, we can see that after wicking in towards the liquidity over the weekend, Ethereum in the end still spent quite some time right here navigating that liquidity pool, mitigating that liquidity pool. So this could have already been a moment in time where Ethereum accumulated a lot of buy and long orders, okay? But the matter of the fact is that if I mark out the 50% level of the wick over here, that we front run that 50% wick fill level. We front run the EQ level over here, as you guys can see, of that 50% wick fill level. So that is definitely something to keep in mind. So even though Ethereum already mitigated quite the liquidity over here, this low over here, around $3,600, remains a draw on liquidity because it aligns right above that 50% week fill level over here. So don't try to long Ethereum over here with your invalidation beneath this low. In my opinion, you're taking a low probability long or buy position if you are taking your chance. So also for Ethereum, in my opinion, the draw liquidity is towards the downside, but the main draw liquidity, in my opinion, is resting on the 15-minute time frame. Because if I navigate towards the 15-minute time frame over here, what we can see is that over the weekend, we started a major pump over here as soon as Donald Trump released some bullish news around the tariffs with China. So we know that this is a pump that occurred over the weekend and it got fueled by some bullish news event, meaning that this low, in my opinion, is a major draw on liquidity around $3,800 for the price of Ethereum. And that's my main objective. Yes, I kind of expected 50% wick fill level to get hit as well on Ethereum, but my main objective is $3,800 for one Ethereum. So also on Ethereum, guys, we're looking for potential executions towards that target over here. Now, if I currently mark out the structure, what we can see is quite interesting because we can see that we had a slow grind up over here, followed by a flush down, followed by price trading higher over here. The problem with this structure is that this part of the structure took place over the weekend, so we knew that we cannot trust it. Right now we can see that Ethereum, like I said, was forming a higher high over here, while Bitcoin was forming a lower high, meaning that indeed on Ethereum and on Bitcoin we have that SMT divergence. Higher on Ethereum, lower high on Bitcoin. While creating that SMT divergence, Ethereum was rebalancing price over here of the major inefficiency that we put in during the New York session on Friday. So mitigating an inefficiency, forming an SMT, and currently finding a strong impulse towards the downside as well. And what we can also see on Ethereum is that the weekly high so far over here got formed indeed on Monday. But the weekly low got formed first, and that one got formed on Monday as well. So now in order to really flip bearish on Ethereum, what I want to see is a weekly P1, P2 flip. The low is the P1, pivot 1 because it got formed first. The high is the P2, pivot 2 because it got formed second. I want Ethereum to take out that P1 because in that case, the Monday high turns into the weekly P1. And now once again, When we look at the weekly time data for Ethereum, we can also see that Ethereum, around 64.1% of the weekly candles, formed their first pivot on Monday as well. So Monday is a very important day to form the first pivot for the weekly candle on Ethereum, just like it was on Bitcoin as well. So what it basically means is that if we take out the weekly low, the weekly high in that case will have a very high probability to hold for the rest of the week, and we can enter shorts targeting this drawn liquidity around $3,800 and also the 50% week fill level around $3,600 for the price of Ethereum as well. Now in this video guys, I've been talking a lot about wicks and how wicks are a major draw on liquidity. I've made a very in-depth, detailed video about this that I've released on my YouTube channel completely for free. All that you guys need to do is follow the first link in the description down below, click here or click here, I don't know which one it's gonna be. Make sure to watch that video, and if you guys have any questions, feel free to let me know. Thank you guys for watching, and I'll catch you guys on the next one. Ciao, ciao!